I will govern by a simple motto: promises made, promises kept. We're going to keep our promises. We will make America safe, strong, prosperous, powerful, and free again.
The White House, after a historic election victory, this time managing to win the popular vote along with the Electoral College. What does his strong comeback mean for the global economy and markets? Live from Singapore, this is Inside with me, Haslinda Amin, where we'll dive deeper into Trump's epic win with crucial context and sharp analysis. While most Asian stocks falling as investors position for a second Trump presidency with his promise of steeper tariffs and a stronger dollar. Republicans now on track for a clean sweep of the White House and Congress, with Democrat hopes fading of flipping the U.S. House. We'll dig into the market impact of Trump's triumph with Crossmark's Victoria Fernandez and consider the risks for trade and geopolitics with former Republican advisor Kevin Madden. Plus, could the Trump win supercharge a crypto rally? We talk about the future of digital asset regulation with CFTC Commissioner Caroline Pham. Well, in the markets, investors in Asia having a tough time figuring out how their fortunes will shape up under Trump's return as U.S. president. The region's benchmark stock index swinging between gains and losses as investors weight the ramifications of his promise of steeper tariffs. China's benchmark CSI 300 clocking gains now after dropping as much as 1% at the open. Of course, it is about those tariffs. For more on Trump's re-election, Bloomberg's Vonnie Quinn joins us from New York. It is a significant win. It is a clean sweep for Trump, Vonnie.
Exactly, Haslinda. And to the extent that you're a MAGA supporter, well, you are satisfied right now. And to the extent that you were not a MAGA supporter, well, there's a lot of curiosity in the air. How did the polls get this so wrong? This is the third time now that polls have underestimated Donald Trump, and it was a massive comeback. He gained in every demographic, even in those demographics that he sometimes dehumanized with his language. He gained among Latino men, African-American men, and also geographies. Urban areas swung to the right, and that was completely unexpected. Even the likes of Chicago, New York City, Houston, Dallas all veered a little more to the right than previous eras. Kamala Harris's supporters also didn't turn up in the numbers that were anticipated. It was a little weak, actually, even in places that she won, she didn't outperform. So the question now is what happens with the rest of the chambers in the House and the Senate, right? So the Senate has already flipped. We're watching the House extremely closely. Right now, it's looking favourable for the Republicans, which would mean a red wave. However, we do have to wait for several more days because some of those seats that are toss-up seats are in California, which allows a week after the election for counting.
Vonnie, it does seem already that Trump's agenda is unstoppable and markets reacting to that already.
This Trump trade did continue apace today, as Linda, we saw it across all asset classes, from the dollar, which strengthened, to equities, which soared to new highs, to obviously cryptocurrencies, which also saw new highs, and some of the crypto stocks like Coinbase up 30%. He's perceived to be extremely friendly to the crypto environment. Excuse me, but we will have to wait and see what policies he will be able to enact. We'll have to see how much support he has and how much he'll have to negotiate with Democrats should the House stay Democratic.
Vonnie, thank you so much for that. Bloomberg's Vonnie Quinn in New York. Let's bring in our panel. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments. Also with us is Kevin Madden, Senior Partner at Penta and a former advisor on Capitol Hill to Republicans Mitt Romney and John Broner. Thank you both for joining us. Victoria, let's start with you. That Trump trade flying, how much of that is already played out?
Well, it's hard to tell at this point, Haslinda, and we'll have to, look over the next few days, look into next week. Let's see what happens with the House. I think that will have a big part in how the market continues to react. But it's not just the Trump trade, right? There's a lot of other elements that are driving this market right now. We've had the VIX come down significantly, which is supportive of the equity markets. Earnings have been pretty decent. We're coming into a very favorable seasonality for the market. And you had people positioning very cautiously before the election. You look at that put call ratio, and that was spiking to really high levels. So you have some of that unwinding as well. So there's lots of elements working together that caused the equity markets to make new highs in the U.S. session. I would suspect that we see maybe a little bit more of that continue, but things should start to settle down a little bit. Obviously, bond yields moving higher could temper that a little bit as well. And we have the Fed meeting tomorrow. So, Powell could say something that shifts the tides there also. So lots of different parts here driving the equity markets.
Kevin, you have to give it to the markets. They called it right, but it was still a surprise, a clean sweep. What really resonated with the voters?
Well, you have to say top of mind was the economy. I think across the board, Trump's gains were made in large part because there was just a very big hangover as it related to the inflation that consumers have had to experience over the last 3 years. You add on that rising home prices and then rising prices across the board for things like groceries and gas. And that factored very heavily into people's view of the economy. I think a lot of the macroeconomic indicators that we've seen just over the last 2 or 3 months weren't really felt by a lot of voters. And instead, they viewed the Biden-Harris administration as one that was out of step with some of the concerns they had about the economy. So you take that and then also the contrast that Trump was able to draw against Kamala Harris with a lot of these working class voters in the blue wall states that were so critical to his electoral vote victory. And that just created a huge advantage for him with these swing voters in these battleground states. Kamala Harris was just very out of step with a lot of voters just because, she only had 100 days to try to moderate and try and temper her political profile away from what I think was really her true north and what her long-term profile has been, which is as a liberal, a progressive from San Francisco. So Kamala Harris being out of step with a lot of voters, Trump being able to really harness some of the energy and the anxiety that these voters had around the economy, and it just created what was a very decisive victory.
We have global leaders congratulating Trump, including Chinese Xi Jinping. Kevin talked about inflation. Victoria, Trump's policies are likely to be inflationary, perhaps making it even more difficult for Fed movements and Fed's path going forward.
No, I think that's absolutely right. We have this Fed meeting started today. We get the press conference tomorrow. And if you look at the Fed funds futures, it's right at 100% that we get a 25 basis point cut. But I think if you're in that room, you have to take a step back and say, wait a minute. There is a chance that we're going to see a second wave of inflation come through. I think that was going to happen regardless of who won the election. There were very inflationary policies that were being put forth. So I think inflation, a second wave, is something they have to consider. I think they also have to consider the growth component. There are expectations that under President Trump, that there will be a higher GDP, a higher growth rate coming. And so again, you have to wonder if the Fed is going to want to be stimulating the economy at a time when growth is strong, at a time when inflation might be moving a little bit higher, even though we're seeing some weakness in the labor market, which is where the Fed has been focused. I still think they're going to have to question that. So I believe we get 25 basis points tomorrow. December, I think, becomes more of a question on whether we get a pause or not. And remember, it's not just the Fed tomorrow. We also have the Bank of England, and we have the Swiss bank. There's multiple Fed banks that are going to be having their decisions. And so we'll have to see how all of those work together globally to push yields.
So, Kevin, inflationary is going to be the word to be looking out for. What does it mean in terms of policies? What can be expected in the next 4 years? Growth expected to be a priority for Trump.
Well, I think two things are going to be priorities. I think first and foremost, Trump has very few policies that he cares very deeply about. One of them is tariffs. So we are going to see Trump start to move on an agenda when it comes to trade and tariffs. And I think he wants to use tariffs in a way where he, part of it is a little bit bluster, but another part of it is he really wants to demonstrate some sort of economic strength against our economic competitors around the globe. And in some cases, which will be problematic for him, some of our economic partners in places like Europe. So I think that is going to be one of the core challenges that Trump faces on the policy side. I think the second part of it will be tax reform. Next year, we're probably looking at a tax reform or a tax legislative package somewhere in the neighborhood of $4.5 trillion of in potential tax policy that's going to be targeted. And so moving that through Congress, even if they're looking for the budget reconciliation process as a vehicle, is still going to be tremendously challenging. But it will be a core part of the president's economic agenda. It'll be a core part of how House and Senate Republicans try to communicate to their constituents that they're focused on economic issues. And then it'll also be a core part of how Democrats try to fight back against a Trump Republican triumvirate agenda in Washington, D.C. So I think we're in this afterglow of the campaign right now where, Republicans are riding very high on what was a decisive victory, but there are some very serious challenges looming as it relates to advancing their agenda. And if there's one thing that's a defining sort of characteristic of our politics right now, and I think that translates over to policy, it's volatility. Trump had a good victory, but we're still looking at razor thin margins in the House and Senate when it comes to moving big legislative packages through Congress. So there's still going to be some challenges ahead.
So Kevin talks about tariffs, he talks about volatility. Victoria, you got to wonder, how do you play this market? How do you position for 2025? We know yields headed higher. We know the dollar will be resilient. How do you deploy your money?
Yeah, I think it's a very different story looking from now till the end of the year and then looking at 2025, mainly because in January we hit the debt ceiling here in the United States. And so when that happens, you're going to have a huge component of liquidity coming in to the market as the Treasury spends down their general account. You're going to have questions in regards to the level of debt that the U.S. has, in regards to the interest rates that we have. I think you'll have rating agencies questioning. They did last time we had to raise the debt ceiling. I wouldn't be surprised to see them come back again. Also, we still don't know if the House is going to be Republican or if that's going to be held by the Democrats. And so I think there's a lot of questions as we hit 2025 as to where you want to be positioned. Obviously, what we call that Trump trade that we started our conversation with, you're looking at things like financials doing better, you're looking at tech doing better, strong dollar. Types of companies will be doing well, and that's going to relate. Also, when you look at the dollar-yen trade, there'll be some effects there. So I think there's some items you can have there looking maybe in healthcare that's not related to Medicaid or Medicare. So those are some places that we would look. Obviously, with the run-up that we've had in the market today and probably will continue to have this week, we would wait for a little bit of a pullback. And as Kevin said, there's still volatility coming this year, so I think you'll have opportunities to do that. But those are some of the sectors that are considered that are going to do well under a Trump administration.
Victoria, would you be piling up into Tesla? I mean, we've seen how Elon Musk played such a crucial role in Trump's campaign. Surely a pullback is a buying opportunity.
Yeah, I definitely think you would want to wait for a pullback if you want to go in to that name. Definitely, it had a huge run up. There is a lot of talk around what role Elon Musk will play in this administration, if it will be an official role, if he will be part of the cabinet, if he will be doing something separately. We'll see what happens and how that develops over time. There are some interesting elements to that. And also, if you look at tariffs on EVs coming out of China, Tesla is a company that can withstand those tariffs being there. And so they would benefit from tariffs being put on EVs. So there's a couple reasons to why Tesla could do well going forward. But as you mentioned, I think a pullback is where you want to stand and wait before you jump in there.
And of course, Trump came out to say, Kevin, that a star is born, referring to, of course, Elon Musk. How influential do you think Elon Musk is going to be in shaping some of those policies to do with, tech, AI, space?
Very, very influential. Look, I think Donald Trump has been very unapologetic about the fact that he listens and talks to many of these advisors, particularly those that he's closest with in the business world. There's a very strong possibility that Elon Musk could play a semi-official role, either as a government efficiency czar or some sort of economic advisor. So I think I would take that very seriously. I think, look, many other administrations have had that type of input. I just don't think we've ever seen somebody with this type of candle power and this type of a high profile with a business that also is so invested in not only the economy as we are right now, but the emerging economy. So it'll be sure to be he'll sure to be a target of criticism from Democrats and anybody who is a critic of Trump. But I would expect that it's going to be that he'll be playing an important role, and he'll have the ear of the president for sure.
We're hearing Xi Jinping through CCTV. He's saying that he's hoping to enhance communications with the U.S. He's calling for managing differences with the U.S. properly. Of course, China front and center. And we know Elon Musk loves China. I'm just wondering how that might influence U.S.-China relations. Might Elon Musk play a role in that, Kevin?
Possibly. I think one of the things that is really going to be important for moving those relationships forward is there has been a very obvious tension, to say the least, over the last couple of years. And so if there can be some level of more open communication, if there can be some level of dialogue back and forth on some of the policies, I think it particularly as it relates to trade and tariffs, I think there are many folks who have a lot of anxiety about whether or not that would escalate and whether that would harm everybody's economy and not necessarily be a net positive. So I would expect that there will be some business shuttle diplomacy with anybody who has strong relationships with China. And then I think, Trump has always touted his own personal relationships with Xi and other Chinese leaders, and I think he'll continue on that front as well.
Does that change the calculation for you, Victoria, in terms of whether or not China becomes attractive? I mean, does Musk change the calculation in terms of those relationships and the pressure we're seeing on China?
I think it's one of those things we're going to have to wait and see how it develops. We can't say at this point in time how Musk is going to affect Chinese relations. We know Trump is coming in as a hardliner with the tariffs, and I think you have to kind of separate the tariffs as it relates to China versus the global tariffs that they've talked about in a separate situation. I think the China tariffs will probably be something that happens sooner rather than later in the administration. So we should get an answer pretty quickly in 2025 how that's going to play out. And how relations are there. If trade continues to struggle and if tensions continue to ramp up, then I think you have to be concerned about your investments there, and you have to find other places to put that. And you also have to look and see how that's going to flow through to the semis and to some of the other tech stocks if trade between the countries is restricted. So it's a wait and see at this point in time. I think you would want to be a little guarded on investments going into China right now. I would rather be a little late to the party than be way too early and have it affect the portfolio negatively.
Well, the thing is, Trump has a reputation of fulfilling his promises. He's promised additional tariffs that some say is likely to happen. I mean, if you take a look at China, Victoria, I mean, would you need to see big and bold stimulus, fiscal stimulus, to make China attractive again?
Well, we definitely know that when you look at China, the property sector has struggled tremendously. Now, we've had some stimulus come through. I know we're waiting for some of the meetings to happen later this month to see additional stimulus coming through. And we've seen the Chinese markets respond to that and have some positive movement after a couple months of really struggling. But we're looking at things like exports and how that is growing, and that's struggling as well. But look, U.S. exports from China is less than 3% of China's GDP. So even if you have tariffs put on, China can probably have some workarounds, moving its output to other parts of the country, working on their currency to kind of filter a little bit of that, buffer some of the effects of the tariffs to where it really comes down to being less than 1% of GDP to China. So we'll see in the long run if it's a bigger hit than that. If it is, then I think you do have to be concerned about U.S. multinationals and other companies that are investing there. But for now, I think we wait and see what happens.
Kevin, we've been talking about the Fed, but it's not just about the Fed moves. It's also about Jerome Powell. We know that during Trump's administration previously, Powell wasn't his best friend. In fact, there was a lot of pressure for Powell to do what Trump wants him to do. I mean, what's the future for Powell this time around, you think?
Well, I think that remains to be seen, but clearly Trump is not somebody who hides his feelings about bureaucrats who are appointed by others inside his administration or having an impact on his administration. So I think it's clear that if we were to have a conversation about looking for new leadership at the Fed, I do not know if Powell would be part of that conversation. So, and there are a lot of, stimulus supporters inside Trump's orbit of economic advisors who want to see more rate cuts. And they've made that very clear as part of their policy. They've made that very clear that they are advising President Trump accordingly. So I think you'll continue to hear a lot of chatter coming out of Trump world that's more critical of the Fed for maybe moving too slow here rather than moving too fast on rate cuts.
Kevin, thank you so much for that. Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments, and Kevin Madden, Senior Partner at Penta. Thank you for your insights today. Now, still to come, Bitcoin surges to a record after Donald Trump's re-election. We discuss the outlook for regulation with CFTC Commissioner Caroline Pham later this hour. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, and we have breaking news. China's trade data for October is out. Exports rising 11.2% year-on-year in yuan terms. Imports falling 3.7% year-on-year in yuan terms. Now, in terms of dollar terms, we have exports for October rising 12.7% year-on-year. Imports falling 2.3% year-on-year in dollar terms. Remember that China's share of global exports has risen despite the fact that there's been tensions in terms of trade between the U.S. and China. It's managed to navigate that. But in terms of imports, again, falling about 3.7% year-on-year in yuan terms. That is possibly a reflection of the situation in demand in China. The domestic picture isn't strong enough. So we'll see whether that stimulus package that traders are anticipating from the Chinese government will come through. Of course, it has to come across big and bold to counter the potential tariffs that Trump is intending to impose on China. Again, we have a trade balance coming in at 679.1 billion yuan. yuan, and in terms of dollars coming in at 95.72 billion yuan. Those are October numbers. Now, Donald Trump praised Elon Musk during his victory speech in Florida. No billionaire did more to help Trump win than Musk did. The Tesla and SpaceX boss will now find out whether it pays off. Trump has vowed to give Musk an official role, cutting government spending, and with it, the power to influence policy, as well as federal agencies that oversee his businesses.
Let me tell you, we have a new star. A star is born, Elon. Now he is. Now he's an amazing guy. We were sitting together tonight. You know, he spent 2 weeks in Philadelphia and different parts of Pennsylvania campaigning.
Well, Tesla shares surge almost 15% in New York, and the belief the company will benefit from Trump's return to the White House. Another big beneficiary is Bitcoin, which reached fresh records as the crypto industry expects friendlier regulation. For more, we're joined by our tech reporter, Annabelle Drulis. Bell, let's start with Musk. I mean, he's been front and center in this campaign.
Absolutely. I mean, he's someone, as you said, he tipped around $130 billion into this effort of his own funds. He was frequently at rallies alongside Trump. He offered a lot of publicity and support on X. So, yes, there's clearly someone who's put a lot into it. It's the question now of what does he get back from this sort of investment? And what we're really seeing in across the tech space, not just Tesla shares, but across big tech as well, as this emphasis and this undertone that we're going to get that lighter touch on regulation, because President Trump, or former President Trump, but has praised Elon Musk in the past for someone who could come into the White House, possibly even in an official role, but that focus very much on cost cutting and cost cutting on government agencies. So that could give Elon Musk perhaps quite strong sway over some of the regulators that look after or regulate his businesses, and not only include Tesla, but Starlink, SpaceX, X as well. So there's clearly a lot at play in the tech industry as a whole. And again, that's why we saw that sort of trading reaction. AI, for instance, is another area that's really been a key focus here. How could that change under the new Trump presidency? And again, it's that focus on deregulation, repealing a lot of that executive order that Biden announced at the end of last year, and focusing instead of rules more on innovation, as President Trump, J.D. Vance, both of them have criticized regulation for perhaps holding back the industry as a whole.
Bell, the crypto space could be looking for more rules, but a softer touch, yeah?
Well, I think it's sort of a bit of a paradox, really, but what's been sort of one of the main criticisms of a lot of different crypto players in the US to date has been this perceived reluctance of the SEC to spell out the rules for the industry. So there's been that sort of, again, that perception or that attack on the SEC chair, Gary Gensler in particular, as someone who has been seen as being quite anti-crypto, that he's been more focused on pursuing companies being essentially falling afoul of the rules, as opposed to actually putting rules in place. And that's sort of what President Trump was, or former President Trump was promising to voters in the lead up to the election, that he would actually essentially fire Gary Gensler on day one. That's what he's promised to do, but perhaps put someone in place that would actually start to adopt some rules for the industry. So that is sort of what is being traded off. Of course, yes, rules that are going to be perhaps more friendly toward businesses. And again, that's why we're seeing that sort of trading reaction today.
Bell, thank you. Bloomberg's Annabelle Drulis in Hong Kong. And let's cross over to the Singapore FinTech Festival, where central bankers, regulators and executives from the digital asset industry have gathered. Our own Avril Hung is there and standing by with our next guest. Avril.
Absolutely, Has. I mean, to your point about crypto and the conversation you were just having with Annabelle, we've seen crypto's influence, its involvement in this U.S. election cycle like never before. And of course, the key question, what is Trump going to mean for the regulatory landscape in the U.S.? Caroline Pham is commissioner at the Commodity Futures Trading Commission, and she joins me now. So, Caroline, great to see you on a day like today. What do you think Trump is going to mean for the regulatory landscape in the U.S.?
Well, thank you so much for having me here on Bloomberg. So look, I think the American people have made it clear with this mandate, that they want to see people with real-world business experience in Washington. And I don't think it's about less regulation or more regulation. It's about smart regulation. And it's about regulation that establishes clear rules of the road and is right-sized to enable innovation while ensuring safety for consumers, for markets, and for market participants.
So it's about regulatory clarity.
Absolutely. No more regulation by enforcement. We need to establish the rules up front so firms know what they need to do to register. They know where the lines are drawn, and they know what to do, because honestly, we've been in a gotcha environment where people are getting investigated for registration violations without actually knowing how to register, or trying to submit registration applications, but then those being sat on by agencies for years.
So how soon do you think we might actually see this all being put into execution mode?
So for these questions about registration, this is within the remit and the existing powers and authorities of each regulatory agency. So at the CFTC, for example, I've called for a path to registration. And what that's going to involve is my U.S. regulatory sandbox. My digital asset markets pilot program can establish registration requirements, disclosure requirements, financial resource requirements, market conduct and integrity requirements. And then you can do a time-limited 6-month pilot program to look at, for example, tokenized collateral in derivatives markets. So the GMAC, the Global Markets Advisory Committee that I sponsor, has an upcoming vote on November 21st to look at a recommendation for non-cash collateral using distributed ledger technology.
Okay, given that the Senate is going to Republicans, do you think we might even see the revival of a crypto bill in terms of a new legal framework? And how fast do you think we can see things moving along?
So I can't speak for the Hill. That's not my specialty. But what I know is that Congress makes the laws, and then we at the agencies implement it. Washington has this saying, which is personnel is policy. So it's really all about the leadership. Are we going to have leadership with real-world business experience who know how to implement and who know how to execute on a vision?
Does that include potentially, I want to get your sense of, does this include for stablecoin regulation? Is that something that you think needs to get done?
Well, so I have heard that there is a general consensus, right, that we do need to come up with a U.S. regulatory construct for stablecoin. We need to ensure that there is safety around our banking and payment systems. So I do think that's been a priority for both sides.
Okay. What about when it comes to the debate of who should be regulating cryptocurrencies? How do you think the new administration might shape that, whether it's going to be SEC or CFTC?
So I think that's going to be a conversation. It's going to be a conversation. We're going to have to look at where the lines are drawn. But the thing is that for things that are not securities, the CFTC has touch points with that. And that's been clear. And so what I would like to do is we have currently a dormant, inactive, joint CFTC-SEC advisory committee. It was first convened in 2010, 2011 to deal with the flash crash and the interconnections between the securities markets and the futures markets. We can dust off that charter, reinstate it with the vote from both commissions, and then we can start to explore these jurisdictional questions and these jurisdictional boundaries, just like we did for security futures, for options on commodity-based ETFs, and for swaps. Swaps on the one hand and security-based swaps on the other.
So it's not one or the other, it's a joint effort potentially. Does this mean like maybe we might see a new kind of agency that has to come in and deal with this?
It's not necessary to have a new agency. So what we're talking about is we need to have regulatory clarity on what is a security. The SEC has exclusive jurisdiction over securities. Once we have answered this question, what is a security? And the courts have been working through this question as well because many of these cases have gone to litigation. Then the CFTC has regulatory touch points over pretty much everything else.
Okay. We are seeing in this US election cycle the involvement, the influence of cryptos like never before. Does that worry you as a regulator? Is that something that we should be paying more attention to?
My job is to uphold the law and to make sure that we have smart regulations that are in place to protect against fraud, misconduct, and abuse, and to ensure market integrity. So regardless of who's doing what in Washington, the job and the mission always stays the same.
What about Trump having his own crypto project? Do you think that is an issue?
I don't know anything about that. I don't know any details about that.
Okay, let's talk about when you look at the road ahead. Obviously, there are business communities that have just, moved away from the US given the past couple of years. What do you think that's going to look like in the next 4 years?
So with regulatory clarity in the United States, we are going to be able to see more of this innovation happening at home. Because the truth is that it's U.S. companies that are leading these innovations, U.S. non-bank companies, U.S. bank companies, or U.S. banks, and they're doing it, though, in jurisdictions like Singapore and like the EU, because there's more regulatory clarity. Once we have that regulatory clarity at home, then U.S. banks, for example, are going to be able to do more use cases here in the U.S. But that's really been because of this regulation by enforcement environment and a very negative sentiment in Washington. Of course, when you're thinking about your reputation on your legal risk, those are big concerns.
What do you think needs to happen before all this puts in place and gets moving? I mean, there's obviously now a bit of appetite for it, and politically the landscape is there. But, what are the steps that you want to see? What are the key things to put that in motion?
So good policy is hard work, but the answer is actually very simple. We have to have clear rules of the road. So the agencies need to work on rulemakings, and if Congress passes legislation, then the agencies will issue rulemakings to implement that legislation. But we have to put the rules in place, and we know how to do that. In fact, since Dodd-Frank, increasingly the agencies seem to be measured not so much on expertise and on how well they're supporting deep and liquid markets that are well functioning, but instead on metrics like how many rules did you issue, or how many enforcement cases did you bring, and how many billions of dollars in fines did you assess. While those are all parts of our job as a regulatory agency, I actually think that our mission and our jobs to do examinations, to do surveillance, to ensure that when we have a situation like today with very high geopolitical risks, with a very strong headwinds in the macroeconomic environment, that we ensure that our markets are well functioning and liquid, even through market shocks or market dislocations, or let's talk about Treasury market reform. The single biggest transformation in market structure in the most important market in the world. We have to ensure that we're ready and can work together on those interconnections between cash treasuries and the Treasury futures market to make sure that this happens smoothly as we move towards clearing.
Yeah, there are a lot of uncertainties at this point, and having regulatory clarity might just help the environment overall. I wanted to get your thoughts as well, because this U.S. election, we've also seen, betting markets, betting on the U.S. election, on U.S. platforms, though they claim that it's not U.S. users. From your standpoint, is that something that we should be concerned about?
So this is something the CFTC should have addressed a long time ago. Back in 2008, the CFTC did a request for comment on event contracts, and a lot of the commenters at that time discussed the utility of information markets or prediction markets. So I absolutely think that since this issue has been around for that long, the CFTC should have been working on a rulemaking for prediction markets, because a prediction market measures pure sentiment. It's pure conviction. There's not an underlying per se that there is, for example, with the rates market or with securities markets or commodities markets. So by establishing rules for prediction markets, and by the way, my pilot program works for that as well. We could do a pilot program for prediction markets, get them regulated, get fraud and surveillance, anti-fraud and surveillance measures in place for those markets. I don't see why we wouldn't want to do that. And in fact, we have prediction markets in many non-US jurisdictions, like the UK, like Australia, and they work.
Instead of blocking it, to regulate it. But why do you think we're not just seeing that at this point?
Good policy is hard work. We have to prioritize it. We have to put in the time to put out a proposal, to get public notice and comment, to work through all of those issues, and then to construct a regime.
Okay, Caroline, thank you so much. Really good to chat with you, get your insights on what the next 4 years might mean for the regulatory landscape as well. Caroline Pham is Commissioner at Commodity Futures Trading Commission.
Avril Hong at the Singapore FinTech Festival. Of course, we've heard from Trump how he wants the U.S. to be the crypto hub of the world. He did talk about how crypto is just like the steel industry 100 years ago. So front and center, we can expect a lighter touch when it comes to regulation on cryptos. Of course, on the back of that, we saw how Bitcoin rallied when Trump was the winner of that election, and some people are expecting Bitcoin to get to 80,000. Let's do a check-in on the Indian markets. Of course, it is trading in about 10 seconds from here. We've seen how Asian markets have reversed earlier losses, now in positive territory, even as investors assess the potential impact of Trump's tariffs on not just China, but the rest of the world. In terms of the Sensex index, it is flat at this point in time. In terms of the rupee versus the USD, 84.2937, it is flat. We know that the USD is expected to remain resilient. It will weigh on Asian currencies, especially emerging market currencies. Well, still to come, traders taking stock as Donald Trump and the Republican Party bask in a decisive election win. We'll get more market insights next. Keep it here with us. This is Bloomberg. Welcome back. Let's do a recap of China's trade data for October. Exports continue to surge ahead. Taking a look at those numbers, rising 12.7% in dollar terms from a year earlier. The country's trade surplus reaching 95.7 billion. That is the third highest month on record. And that's despite a backlash from other nations against the influx of cheap goods. Remember that China's share of global trade has continued to rise despite those measures from the U.S. to put a lid on China exports. It's managed to find other countries to be sending its goods to. China's economy expected to face further complications with Donald Trump's return to the White House, potentially leading to new tariff barriers and forcing China to find new markets for its products. In terms of the market performance, we have China in positive territory, along with Hong Kong reversing earlier losses. In terms of what we're expecting in trading session in the U.S., S&P futures pointing to a higher open, up about 0.1%. Of course, people have been talking about that Trump trade gaining momentum. The likes of Max 7 will continue to trend higher. Of course, Tesla is one to watch, given how big a role Elon Musk played in those campaigns. Taking a look where we are in terms of the yuan, 718.81. We saw the weakest fix for the currency since 2022, I believe. Well, let's get insights. Talk more on the markets, bring in Bloomberg Live strategist Mark Cranfield. We know there was expectation Trump was going to win, but it was a clean sweep. How prepared was market for that?
Probably not for the sweep. We have not fully confirmed yet. They haven't got all the votes in, but it does look as though it's going to be a Republican sweep, similar to what we saw in 2016. And in some respects, even a cleaner result, because it looks as though the momentum came very early in the day, and you can see the way that trades played out. We didn't get the reversals that we saw in the previous round, where people started moving the market one way, then coming back. Pretty much it was one. Dollar stayed strong, equity stayed strong, yield stayed high. It was pretty much one direction. It's probably going to continue for a while. What we saw in 2016 was that most of the big themes played out all the way until Inauguration Day, and then some of them started to reverse after that.
There's a bit more clarity when it comes to the U.S. election. We wait and see how much tariffs will be imposed, but a lack of clarity where the Fed goes from here. 25 basis point cut perhaps priced in already, but where it goes from here is a big question.
Well, the traders are pricing in about 100 basis points worth of cuts, including the one we're likely to see today, all the way through to about 3/4 of the way through next year. Now, that is the part that really is very much in question, because now that they know who the next president is going to be, they obviously will say that they can't speculate on policy, but they will surely be thinking to themselves, this is going to be expansionary. That's the way the market is responding. They would expect a stronger economy, more spending, lower taxes.
All inflationary.
All the things that are potentially inflationary. They won't want to commit to that, but that's probably what they're thinking. So that certainly puts into question mark the idea that we're going to get Fed cuts all the way along the road. And of course, December is the one that people already will be thinking is a possibility of a pause. That's not priced at the moment. People are still thinking there's a slight chance they will cut rates again in December. But most likely that will, as we get closer to the date, as Fed speakers, they're in the blackout period obviously at the moment, but when they start to come back online, we may well get Fed people saying, in view of the changing circumstances, we are not so sure about December, and that's what makes it interesting for the market, that 100 basis points is probably too much priced into the market.
Inflationary or not, this is an economy that's resilient, and Trump will ensure that growth continues in that path. I mean, you got to think money will be flowing into the U.S. market, and emerging markets will be in doldrums.
That is the initial view. It looks as though it will play out. We saw it play out for several months the last time around. The thing about potential for trade tariffs, if they come, and who they're targeted against, can be a little bit hard to predict the outcomes in relation to that. Now, one of the things that surprised some people yesterday was the weakness in the euro currency. It fell as much as most other major currencies, it actually worse than some cases, because people think that Europe could be a target of some new tariffs, more so even than they were the last time around. Now, that is a new dynamic which people haven't really dealt with the previous. There's not a comparable case yet. Of course, China got the brunt of it last time. Looks as though maybe Europe is going to be in the forefront this time. And you can see underperformance immediately by European equities, the currency, and yields are pricing in the fact that the European Central Bank may need to do much harder work than the Federal Reserve next year. That's a dynamic we didn't really deal with last year. And the euro is a very big, important currency. It will have consequences for many assets.
Also the yuan, that will have ramifications, and we're already seeing the impact of Trump win on the currency, and we've seen how the PBOC has had to step in.
Yeah, and you look at the way they did their fixing today. You can see they're being very realistic about things. The way they set the fixing was a slight pushback to the market, but allowing a certain amount of room for dollar yuan to trade higher without any real blockage in the way there. And that's a realistic outcome. They will be anticipating there's going to be some negative headlines coming through from the Trump camp between now and the time of inauguration, and that's obviously going to hurt the yuan to some extent. So they're not being blind about it.
So just one final question and a quick one. Big and bold stimulus expected tomorrow from China.
Yes, I mean, you would think now they will step up and they will do all the things they've been promising to do, and they will put in some numbers, and hopefully some very big numbers that the market can look, wow, that's good, you really mean business.
And it has kept its powder dry, so this is the time to move. Bloomberg MLive strategist Mark Cranfield. Well, before we go, here's a look at our guests for tomorrow. We'll get insights on the bond market with PIMCO's Alec Hirschman as Trump's re-election stokes inflation fears. We'll also discuss how Trump's win can impact U.S. and India ties with former Indian ambassador Meera Shankar. And we'll talk about the outlook for the hospitality industry with the CEO of India's IHCL, a Tata unit that runs the luxury Taj hotels, also the Pier in New York. That is it for Insight. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.